there might be some people listening to this who are thinking like, what the hell is accrual accounting? How is it different from cash accounting? So maybe we start there and just talk about like, what is the difference? Why is it important? And in layman's terms, cash accounting is generally how most firms start running their business because it is the simplest way to do accounting. And cash-based accounting is exactly what it sounds like. When is cash going in and out of your bank account? And when you want to look at a given time period, say the month of July, anything that came into the bank account between July 1st and July 31st is going to be considered revenue. And anything that left the bank account between July 1st and July 31st is going to be considered an expense. And through that lens, as you book things when they happen, and that is your performance for the month. Now, for a lot of businesses, that works just fine because it is a reasonably accurate representation of their income and of their performance. And depending on their business model, it can work fine because there's generally just not going to be that much difference between when cash comes in and out of their bank account and when expenses are incurred, especially if you have like a very recurring revenue business, all your clients are automatically invoiced. There might be like a little bit of nuance there, but it's not going to be significant. And when you're small, it's just usually not that important or that worth it to make that any more complicated than it needs to be. And your primary reason for doing all this bookkeeping and accounting is mostly for cash flow, right? To make sure that you have enough cash to run your business, and cash-based accounting is good for kind of lending itself to that lens on the business. And then filing taxes. And even a lot of firms that do switch to accrual accounting, which I'll explain here in a moment, may still file their taxes on a cash basis because that helps them sort of skew the numbers in a way that is advantageous to them from a tax perspective. So, and in simple terms, that's essentially what cash accounting is.